Good afternoon, everybody. Welcome to the 26th of July today. All red, a bloodbath for the financial markets. I'm sure some of you profited out there. As I can see, Skilled Stocksman sounds like he was short on the futures market and kept riding it down. Good for you, my friend. Glad you pulled some change out of this market today. I'm going to talk a lot about Microsoft. We'll talk about Google today as well. But I'm going to start things off by going over a quick comment that came in from Eric. And of course, as always, I look through the YouTube comments first. That's my first place to go when I get ready for the show, just to see, what feedback you guys had for the program or what you'd like to see in the future or just random questions. And this is a great one that came in. For those of you who might not have joined us for yesterday's show, I talked a lot about psychology, and my attitude is just deal with psychology, right? Understand it, and hopefully you can overcome some of your obstacles. But I thought I'd share this one because I think it summarizes yesterday's discussion. Eric, thank you for the comments, my friend. He says, one strong takeaway from you is that with this session especially, one cannot enter a trade with the outcome of avoiding a loss in the pursuit of a profit. You are either right or you are wrong. And if wrong, accept the loss and learn from it and improve where possible. Yeah, ultimately, we are the biggest risk managers out there. We are the ones that define all risk that we take in most aspects of our life. If we choose to be risk averse, well, then don't walk around the streets waving a bunch of money in Southeast Asia. If you are extremely paranoid, then buy yourself a piece of property, build a giant wall around it with armed guards, and protect yourself so that nobody ever gets in. I mean, we can control the amount of risk that we're willing to tolerate. In the financial markets, it's simple, right? If you're afraid of something, don't take the trade. Now, what I was emphasizing repeatedly yesterday was, every time you make a trade, there has to be three variables in there. Your entry, your stop loss, and your price target. Always. If you don't have a stop loss, then you're gambling. You're just saying, I hope I make it. You're assuming that you're not going to lose. And I actually do it differently. I assume that every trade I go into, I'm going to lose. I know it sounds awkward to flip it around like this, but go into every trade saying, if I lose on this, here's how much it costs me. And that's the most important piece. If that number is too much, then I will drop the number of shares or contracts till it gets to the point that if I hit my stop loss, then I'm fine. Do I want to lose? Hell no. None of us want to lose. But it's just a fact of doing business as a trader. So love it. One cannot enter a trade with the outcome of avoiding a loss in the pursuit of a profit. You always have to go in thinking, how much am I willing to lose? All right. That's it. Thank you, Eric, for that one. Hello, everybody. You're in Mazatlan, Mexico? I want to be down there, Milagro. I want to come down there. Glenn, what was the date of the last Fed rate hike? I believe that was June 14th, if I'm not mistaken. I'm pretty sure it was June 14th. So, yeah, I think it was June 14th. And we got 75 basis points. And now, let's just take a peek real quick since you're asking about rate hikes. Here's what we have scheduled for tomorrow. The probability right now is at I'll be exact, a 24.9% chance that we're going to see a 1 point raise tomorrow, a 75.1% chance that we will see a 75 basis point increase tomorrow in the Fed funds future. So there still is that chance that we get a full 1 point tomorrow. So be ready for that. Just in case it happens, you could see a lot of volatility out there in tomorrow's market. Now, today's topic is pretty simple. Obviously, I call them the popcorn trade of the day, which is typically when you have a security that is historically highly volatile and moving all over the place. I like to call those the popcorn trade of the days. And today we had two of those. We had Microsoft and Google reporting earnings today, and they both missed the mark. Here is the numbers that came out, and then we'll check out the charts. Microsoft, you can see up at the top there, just under $2 trillion market cap. They missed slightly. Missed by 2% on their earnings, and they paid the price down about 1.19% on the session. Of course, it's actually bouncing back right now, so let me show you Microsoft right now. Here is your daily of Microsoft, and you can see it was a pretty bad day. But after that earnings announcement, you had some pretty wild fluctuations. Here is your after hours, and everything in this light blue is what happened after hours. So you can see it was selling off most of the session, rallied into the close, earnings came out, it got slaughtered, and then ripped right back up. This is a mild example of a popcorn trade of the day. How much did Microsoft fall? Well, it fell 3.4% in 5 minutes, and then over the next, oops, I got the numbers wrong. Over the next, we'll call it half hour or so, it's bounced up 4%. So added together, you got a 7.4% swing in a period of about 30 minutes. That, my friends, is what a popcorn trade of the day is. But that's not the worst of it. As I look through here at the Microsoft chart on a 5-minute, we'll see what happens tomorrow. Nobody can really predict exactly what will happen with regards to Microsoft on the open tomorrow. Bottom line is they missed earnings. Not a big miss, but they certainly did miss. Now, a slightly bigger miss, as you can see from the sheet here, was Google. Now, Alphabet. I'm always going to call it Google because the ticker symbol is GOOG. So you can see you've got two different Alphabet here. One is a Class C share. One is a standard share. GOOG and GOOGL. I'll pick either one. They both missed to the tune of 6-cent miss on their earnings. They slid about, actually in the after hours they were up, but they missed by 4.72%. Check out the chart of Google in the after hours. That is a nice popcorn trade of the day as well. So when that announcement came out, it sold off to the tune of about 0.72% in just a matter of minutes. And then it's rallied almost 5% since then, almost straight up, and then it sold off again. So this is the definition of popcorn trade of the day. Some will call it whiplash trading because it just jostles back and forth over and over and over again. Right now, it's kind of surprising to see Google, have a nice positive one, even though they missed their earnings expectations. What they had was positive advertising revenue, which they viewed as a good thing, and then we're starting to see Google be rewarded for that with this nice move up in the after-hour session. Now, how is it impacting the other markets, meaning the overall? Well, we can look at NASDAQ futures here, which had a little bit of a bounce. You can see right when the market closed, even though Microsoft tanked initially, NASDAQ is rallying right now. And off the lows that we saw about 40 minutes ago, NASDAQ is already up about 1% in the after-hours session. So not too bad for anybody who might be looking at going long. I still am short. I was planning on actually closing out my options position tomorrow before the FOMC announcement. But we'll wait and see how it all pans out. So that is your two initial horrible earnings pieces. Now, there were a bunch more on here, as you can see. Google and Microsoft are really the only two that missed earnings. Everything. Let's just throw General Motors in there as well. But let's be honest. Did anybody really expect General Motors to make money? Have they? Do they make any money? They did make money, by the way. You can see they made $1.39. They were expected to make $1.39. Came out at $1.14. They missed by 25 cents there, and they are down 3.39%. But on the longer term chart here of General Motors, which I will share with you right now, you can see pretty much in tune with what the market's been doing, stair-stepping lower and lower and lower and lower. We came right up into an area of supply 2 days ago, just like the overall, actually Thursday, just like the equity markets, and now selling off. So given what's going on, would not surprise me to see this challenge those lows right around $31 on General Motors. Other earnings notables? Well, there are quite a few. 3M beat earnings. Archer Daniels Midland blew out earnings, beat by 22% on their earnings call. McDonald's, because somebody's out there eating the McNuggets. And of course, as they eat those McNuggets, they're loading up on some sugar beverages. Coca-Cola also beat by 4% on their earnings. They were up 1.5% on the day. And then Visa. Gotta love charging people 29% interest on carrying balances, especially as they're being laid off and we're seeing salaries start to decline. Yeah, usurious Visa and MasterCard. But Visa beat earnings by a good margin, up 1.2% on the day. Okay, so that was the bigger news. I guess the piece that I have to focus on and draw attention to would be the real estate prices and the economic data that set the tone for today. Now, even though we had Case-Shiller Composite 20 Home Price Index numbers today, you had Richmond Manufacturing Index numbers, you had new home sales, you had all kinds of economic data, it was all overshadowed by yesterday's statement from Walmart. Now, I don't know if you guys caught that one, but Walmart basically saying, look, we're loaded up. We've got huge inventories, meaning people aren't buying what they used to, which is typically what we should be doing in a recession. We shouldn't be consuming. We should be saving when things start to look tight. So let's take a peek at Walmart's chart here to see what happened with Walmart. This really set the tone for today, starting off on a very bad note and basically staying there. This caused the markets to gap down, and that was really the talk track of the day was if one of the biggest retailers in the world is forecasting that the next few quarters it's going to get fairly ugly, meaning 11 to 13% contraction in their earnings, this could really be a bad thing for our markets going forward. I didn't see, Ming, I didn't see Google's Q3. Yes, they did give guidance, and they lowered their guidance again. It's the second time that Google's lowered. They actually dropped just recently to a contraction of negative 1% growth for Q3. Now it's negative 11 to 13% growth for Q3. That's a pretty big revision, and a large part of it has to do, from what they say, is they have a ton of inventories. And exactly, GD says, so Walmart should start having some massive sales. Exactly. You know, it's funny, as I've told you guys this before, there's a mantra that I love, which is, if there was a cemetery for traders, it would be full of people who were exactly right, just too early. Now, you guys might remember, because I don't like saying things that people believe I'm making up, but I'm sure some of you can validate this. But back in Q3, early Q4 of 2021, so going back to last year, let's call it October, November, what was I saying about the supply chain disruption? I was like, look, retailers are loading the boat, literally, because the shipping was an issue. We couldn't get boats out there. COVID was still a problem. I said, what will probably have happen is the supply chain disruption will get so big that companies are going to have big inventory. I'm like, wait until January, February of next year, and you might start to see all of a sudden big sales. Hold off on your holiday spending. Well, I was totally right. Just way too early. I think it's actually going to be, getting into, let's say, August, September, where all of a sudden you'll see some phenomenal deals, not just from Walmart, but from Target and other retailers. If this is the common symptom, that companies were buying so much inventory because they were worried they couldn't get anything out of China or other countries because of shipping issues and COVID, then all of a sudden Walmart is to the gills with inventory. Now, I guess the big question is, what does this mean for inflation? Right now we're looking at 9+% inflation rate. If all of a sudden Walmart starts selling things much cheaper and that starts to have an impact on other retailers, then this could bring down inflation as well and be another factor for lower prices. Exactly. Randall says, lower prices on the way. Yeah. Now, I don't think that's me for everything, but I'll tell you what, I'm over here hoarding cash going, hey, I might want to start doing some shopping here soon, right? If you're locked up with a bunch of inventory you got to unload, I'll take that stuff at half off. Bring it on. I might actually need that. So it's kind of like market timing, like we would teach at Online Trading Academy. Just wait for the market to have a point where things get oversold and start buying, whether it's stocks or items that you need for your day-to-day living. Go for it. I think that Walmart's talk track was actually kind of scary. I think it really painted a very ugly picture going forward. And if we look at our markets for today, let me run through the top 7 here. Obviously, Bitcoin taken on the chin yet again, down 4% yet again. Again, I do think we'll see this hit that 18,000 mark, just kind of drifting lower and lower. We'll move to the indexes. Here's your NASDAQ 100. Again, I am still short on NASDAQ that I shorted on Thursday. I'll probably keep that till the morning, and I'll reevaluate tomorrow morning. If I get a nice pop down, I may unload it, or probably just unload half of my position just to, I guess, lighten the risk of that FOMC announcement. Now, right now I have 30 puts on the NASDAQ and just 10 on the S&P. So here's your NASDAQ 100, and you can see we have this red line here, which I was kind of curious to see whether we would bounce off that. I was anticipating coming down to that line and bouncing off today because of the Walmart news. We just went right through it and we closed below it. So that to me signifies, at least from my technical analysis experience, it will probably start drifting back down towards this blue upward trend line, which of course would be great for my short position, maybe combined with some negative news from the Fed, which I don't think we're going to get, to be honest. I think it's actually positive news from the Fed. This ultimately becomes my target down here. Echo says, I see plenty of large retailers with storage containers stacked in the parking lots. Well, that's going to be ugly. That's, you got to pay extra for that. So they're eating more costs if that's the case. Here's crude oil in the day, down 1.2%. Notice today it rallied up, came to that downward trend line, and sold right off. This is not a good sign. I know we had a gentleman yesterday who was saying, hey, I'm thinking about buying crude oil here. And it's like, okay, well, it's worth a shot. The fact that we went above this and got slammed back down, that's really not a good sign. It really feels like there's more and more pressure mounting here on crude oil to the downside, and that might be coupled with the 0.7% increase we saw today in the dollar index. Here is that nice spike up in the dollar index. Of course, a move up here is going to have impacts on the price of crude oil. S&P 500 down 0.77%. Not as dramatic, and it actually is respecting that breakout line at 39.17 that we had drawn for the last couple of weeks here. Good news for anybody who's long. We are holding that kind of demand zone, or what some might call support line, right there at 39.17. That was down 0.77. Dow down 0.59. Much more condensed. You notice Dow seems to be really holding here, even though it's only 30 components, not as much volatility as some of these other ones. Why? Because it's in the big blue chip companies. Russell 2000 was down 0.45%, but I don't see anything noteworthy here from a technical perspective. And finally, gold. Oh, gold. We had gold down just a little bit, down 0.22%, making all top 7 of my normal watch list here, all red on the session. But if you look at it from a technical perspective, I don't see anything really noteworthy here for gold. It's just kind of stuck in this range bound between these two green lines, or 2 lines I have on the screen at 1673 and 1752 is that kind of that range that I have drawn out there. So there you go. There's your top 7. What did I miss in the chat? Was the supply chain catching up in the Fed and policy-driven inflation? Possibly. You know, I definitely think it was businesses trying to get a hold of whatever inventory they could get. And also, you know, you would think that would help their profit margins because they bought so much and all of a sudden prices started rising. They could charge a little bit more. But it'll be interesting to see what happens when they try to unload all this stuff that they just bought too much of it. Nothing like a great sale to get people to spend more money they don't have. Yeah, well, maybe that's why Visa did so well today, right? Let's see. Walking around Walmart during last year's versus today's crazy. Shell stocked to the rim. Oh, I try to avoid Walmart. There is actually a funny site if you ever want to just be disgusted and entertained at the same time. I think it's called People of Walmart or Customers of Walmart or something like that. Just pictures of just, wow, Walmart is a special place. Let's see. Or is the situation different this time because Walmart doesn't know when it can replenish the stock because supply chain isn't back to 100%? Maybe no sales. No, from everything that I've been reading on this, not only just Walmart but Target, is they're basically saying they need to get rid of some of their inventory, right? Because that inventory becomes old and static, and they need to have whatever the current inventory is. So maybe it's new fashion, maybe it's new electronics, especially as they get into the holiday season. So think of it. If Walmart loaded the boat and really was preparing for the worst and got all this extra inventory, and all of a sudden it got delivered, now they're like, oh, well, we have all this inventory, but I got the holiday season coming up, right? Now, I'm jumping the gun here. It's only July, but we really start thinking about it in September. So all of a sudden, hey, Santa Claus is coming to town. Here we go. Let's not even think about Halloween or Thanksgiving. We got to go straight to Christmas and let's start buying stuff. I mean, it's insane the way our economy pushes us sales on us, but Walmart's going to have to start clearing some stuff. Now, I don't know exactly what they're loaded up on. It'd be nice to see exactly what their inventory profile is. Is it apparel? Is it, electronics? Where are they heavy loaded? Because then you start to see where those sales really come from. So that will be something I'm actually going to try to find out for myself, is see where they're heavily loaded with their inventory. Because that statement they made showing a contraction between 11 and 13% in their sales, that's very uncharacteristic for Walmart to have that type of contraction in sales. I mean, they're just such a juggernaut. So it'll be exciting going forward. I think it'll create a lot more volatility in the marketplace. But think of it this way. If Walmart, who can survive pretty much any bear market, I think we'd all agree that even in the worst of the worst bear markets, Walmart's going to survive, right? They're just too big. They're everywhere. And we all know if I need the bare minimum of a pot or a pan or a pillow or a blanket, I'm going to Walmart or Target, right? That's cheap garbage. However, what about all these other retailers? One of the articles I was checking out today was saying expect a wave of bankruptcies in the retail space going forward. And I was like, ooh, that actually does make logical sense. If some of those retailers are in the same position, they may not have the profit margins to offload that inventory and stay afloat. So it's going to be interesting. Shopify today making an announcement. They're laying off 10% of their workforce. And I'm starting to see more and more headlines of X company laying off workers. And, I talked about this before, which is the stagflation debate. We're not there. We do have declining GDP. We do have rising inflation, but we do not have surging unemployment. That may change in Q3, Q4 of this year. Again, we just have to wait and see what those numbers are. But that news from Walmart to me was probably the biggest piece of the day. I look at this earnings calendar and most people look at this and go, oh, wow, Microsoft missed and Google. That doesn't make it's important because obviously these are going to impact the stocks right away. And Google and Microsoft are such big components in the NASDAQ and the S&P. It's a factor. But the fact that we had Walmart say what they did really was like, I can't believe you said that. But it's transparency, right? Let it out there and let everybody weigh in on what the price of Walmart should be. Now, some people ask me, is now a good time to buy Walmart? I don't think so. I think I would probably hold off, even though it's down almost 8% on this session. You're coming right back into the lows we were at just a couple weeks ago. But if Walmart's telling us that they're going to be that bad, I personally think you're going to see it break this most recent demand zone and trend lower. So where might we go? Well, let's just draw the simple horizontal lines here on this chart. Here's Walmart, where we bounced off of. That's a pretty clear one at 117. But the next guy, well, you're down in here. I would say the beginning of that zone is right on 105. So would I be interested in owning Walmart at 105? In the long term, I would say yes, right? Yeah, Amazon and Apple is going to be on Thursday, guys. So this is no light week. We have some monster announcements. But look where Walmart's come from. And obviously they've done incredibly well. They are one of the more stable, the biggest retailer, one of the biggest retailers out there next to Amazon. Do I see it getting down to the $50 mark? No, I don't think so. I think that's, I wouldn't say inconceivable. Nothing is inconceivable in the trading world, but I definitely think the 105 mark, maybe getting down to 100, could be a logical turning point for this. So there we go. Just my perspective on it. I may actually be selling some puts on this at the 100 mark. And why not? I'd be happy owning it. If I'm going to collect a little bit of premium for that, great. I have not looked to see what the premium is. I'll check that tomorrow. But given the pain point that happened for Walmart today, you probably could have gotten some great premium by selling some puts. Let's see. Tom says, from a business school perspective, Walmart is legendary for the logistics and forecasting. Yep. Starting in rural Arkansas made them stronger than typical suburban retailers. Yeah, and they control so many supply chains. They are the master of supply chain. So I agree with you, Tom. I think that by them making this statement, I don't believe this is something that they're exaggerating. I think they, in many cases, are going to underplay it, but still it's painting a very dark shadow on the market for Q3. So, it makes me feel like I should hold on to my puts a little bit longer, since I still have 90 days to expiration on my puts, and maybe even buy some more. But I got to wait and see what happens tomorrow with the Fed. I can't jump in with any sort of size before a Fed announcement. Just, it's outside of my character and kind of crazy to do. Is it transparency or market manipulation? They can purchase more of their own shares at a lower price. Yeah, Dave, I used to always think that too, and it could be. It really could be. But I think just off the experience that we've had over the past couple of years, I think it's fairly clear that businesses were faced with a conundrum that they just really didn't know how to deal with, which is massive supply chain disruption, sales plummeting through the floor because no one was buying their stuff, and kind of reinventing themselves. So I'd like to think that Walmart is being rather transparent here, but I don't trust any numbers. If they are, in fact, that gloomy, then maybe it means we should buy some going forward. We all have to make that own decision for ourselves. Thomasina, okay, now I live in Arkansas, and the Walmarts are a lot better. I don't know. I think the people of Walmart are actually based out of Arkansas. There are some special people that go through those stores. I think that people do it as a joke. I don't know if you guys have ever seen this site, but people post pictures of the Walmart customers, and man, I think that they actually just dress up just for that, just to be shock factor. Judy says maybe it's time to invest in SCO. I'll say this, Judy. It's never a time to invest in a double or a triple leverage ETF. Never a time to invest, because investing means you're holding long term, right? To me, that's a problem. When you hold something long term, that's when you get killed with these leverage ETFs. There's a decay factor, and let's say on January 1st, I go long a triple short ETF, right? Triple short. And let's say it's SPY. So SPY is normal, and I'm on the triple short of that. And let's say we get to December 31st, and SPY is exactly where it was on January 1st, having lost nothing. And you're like, well, I'm in a triple short. S&P's at 0. I should lose nothing as well. You'll be down probably like 8 or 9, maybe even more percent because of the way it's calculated. So if you're going to trade something very actively, or you expect there to be a monster move in a very short period of time, then I would say go ahead and use something like those leverage ETFs. Here is your ultra short. So I think this is the double. It might be the triple or double. I don't know. I don't do SCO. But you've got this double or triple short crude oil. Well, look, it certainly could make some good money for you, but just know the longer you hold this, the more you're going to lose no matter what happens. Whether you're right on your direction or wrong on your direction, you will be losing money the longer you hold it. So I'm always like anti-investing in leverage ones, Judy, and for anybody else. Now, don't let me scare you away from it totally, Judy. If you're looking at a situation like this, and let's say you're looking at this little area right here, right? That little red line I just drew on your screen. It has not been able to break above that. But if all of a sudden we get above 29 bucks on this ProShares Bloomberg crude oil ultra short, that means that crude oil is tanking, which it could. Here's the crude oil chart, right? We're right there right now. I mean, we came down aggressively. This is a weekly, by the way. We came aggressively down to this 93.60 mark. If we bounce from there, okay, well, I think that's the higher probability move right now is that we bounce. However, if it breaks that, do we find it down to 66? Well, if that's the case, then SCO is going to be a huge winner, right? That'd be up here somewhere, right around that $80 mark. It's just I always got to tell people about that because most have no clue that there's a decay factor out there, and the longer you hold it, it will just bleed you dry. Let me just give you, I'll do it another show when I have more time. But there you go, Judy. Hope that up. I've seen some of the Walmart picks can be entertaining. Yes, they are entertaining. They are absolutely just laugh out loud for some of them. Let me see. So I went through. Let's show you this one because I definitely don't want to be the purveyor of doom and gloom. But the dominoes we've been talking about in the show are just they seem to be lining up more and more. And here is some further supporting data that things are getting worse. So you have up here the Case-Shiller Composite 20 Home Price Index, right? I actually expected this to be lower. I expected this number here to be, a little bit worse, right? And I think it's going to get worse going forward. But what you're seeing is the percentage of gains in the housing market has been declining slightly year over year. I think that's going to continue, no big deal. So that would be a negative piece for our market. You have the Richmond Manufacturing Index below that. And again, Richmond Manufacturing Index, what that basically is telling you is it's a measure from manufacturers in the Richmond area saying what are their thoughts on the current inventory and products and supply chain and employment. And anything below zero is contraction. You notice that it's been there, and they actually expected it to get worse. So today was a positive sign, although not great. It's still at zero. So there's not like, oh my gosh, this is booming. It basically means people are at zero. It's not expanding, it's not contracting, it's staying right where it's at, which is better than what it was at negative 0.11 or 13. Okay, the other piece here is consumer confidence. It's dropping, and I don't care. I think consumer confidence is a joke. I don't think you ever need to look at this number. I think you need to just look at your wallet, your friends, your family, and say, what do you guys think about the market? What do you think about life right now? How is it looking? Are you happy? Are you excited? Are you depressed? You want to buy? You want to spend? And if that number is declining, then go off that number. This number here, though, new home sales, most important one of the day. As you guys know, or may not know, but I'll tell you, GDP, gross domestic product, real estate, and the housing market represents roughly 15% of that. And where did I go? I want to show you this number right here. They were expecting new home sales to increase, and I've been saying I don't think so. I think it's going to be dropping because rates have gone up so much. Even though Toll Brothers, Lennar, KB Homes, Pulte Homes, they have been offering all kinds of specials to entice people to buy, it's not working. So look, the expectation was that we're going to actually increase new home sales to the tune of 21,000 more than expected, up to 663. Not only do we not go up, we came down. We're at 590. Now, that's still a lot of new home sales. However, it's showing a decline. And to me, this is a big negative mark for our market. Because if that continues and we start to see home sales declining sharply, what does that mean? That means Toll Brothers and Lennar starts doing layoffs right away because they'll be the canary in the coal mine, in my opinion. So what does that mean? Well, let's look over here and we'll go SHB. No, I'll do Lennar. All right, so here's Lennar. You can see on the weekly here on Lennar, it's not like it's a bloodbath. They've gone from 116 down to roughly 62. So off of its peak, got close to down 50%. Right now, off of its high, as it closed today, it's down 31%. All right, well, I think we need to keep an eye on this because if we are starting to see new home sales slide like they are, then in my opinion, what's going to happen with new homes sales like Lennar and Toll Brothers, etc., it's going to start drifting down. So keep an eye on that one. Here's Toll. right? Toll Brothers in a similar situation. Toll Brothers off its peak that it got on December 13th of last year is now down about 35%. I forget Pulte, P-U-L, and go to stocks, PHM. Did it change their symbol? Here's Pulte, and going back to their peak that they had in May of last year to where we are right now, down 33%. And I think I did KB Homes. Here's KB Homes. KB Homes off of its high that it achieved back in May of last year, they're down roughly 40%. So, kind of, in my opinion, the writing on the wall is more downside move here. And I think that this economic data today was big at helping point that out. Now, what I want to do, see if I can bring this up for you guys, is I want to go to Forex Factory, and I want to bring up those new home sales numbers. So here we are. Here's Forex Factory. And one thing I love about Forex Factory, it's got a little graph over here. You guys, what do I always say? The trend is your friend until the bend at the end, right? Well, what's been going on? Can you see the bend at the end here? It looks to me like we stopped back here in January of 2020, and new home sales have been declining ever since then. Granted, slight moves up here, but pretty much ever since, it's just been getting worse and worse and worse. So if we do continue to see this decline, expect there to be a pullback and a decline in GDP. Now remember, they said GDP was going to come out at 0.4%. That advanced GDP number anticipating 0.4%. I don't see it. I really just don't see that number coming out. I believe it's this Thursday is the advanced GDP number. So anyway, my old friend Tim Bloss used to say, watch the commercial construction. Yep, exactly. Because they're smart, right? Believable. They're not going to be like, oh, well, we're going to go into recession. Let's keep building. They're way smarter than that. They know, they can tell by their sales, and everything that they're doing is analysis on demand. That's how KB Homes, Pulte, all these guys, Toll Brothers, they're all going off of demand. If they can sense demand, all right, we're going to go and keep building these projects and, make sure our profit margins are in place. They've been loving the past few quarters for sure. I mean, you've got record home price improvements, so they're loving it. However, everything works until it doesn't. What are your thoughts on the impact of chips plus bill? Oh, the chips. I don't know. I haven't. Edie, I have not looked at the chips plus bill. Unfortunately, I haven't looked at it, so I can't make a comment on it. But I will check that one out. We need to find the biggest issue of car loans and find a good supply zone to short and expectation. I think we're there. I think you might actually be a little bit late. I think we might be a little bit late on the issue of car loans, but yeah, I don't know specifically who I would be looking for there. Remember Scott McCormick also saying commercial construction is an indicator. Yep. I mean, how could it not be, right? If the big money, and you got to look at commercial construction like a commercial bank. They know what's going on in the economy. Not only do they know what's going on in the economy, but a lot of these commercial banks, they have employees in high-ranking positions at the Fed, at different firms, government agencies as well, so they can help themselves. You think that's not the same with commercial construction? Absolutely is. So yeah, I would definitely keep my eye on commercial construction. If we see this drift down further, my feeling is we're going to see these numbers here on new home sales continue to decline aggressively. Now notice, just take us back a few months, right? So this is a number that comes out month over month. Or sorry, it's a number that comes out once a month, but it shows you the year over year change. Well, you can go back here just to April of 2021. So, a year ago, we were over 1,000. We were at 1,021 new homes sold, or new homes built. Well, new homes sold, excuse me. And now we are down here at does that say 666? That's a good one, 666. And the number that came out today was 590. So we're almost half of what we were back in April of 2021. So things definitely sliding and slowing down there a lot. All right. So let's see. I already answered this question here, which is what did you make of the Walmart analysis? In my opinion, that is going to set the tone for the next couple weeks here. I think it's going to be ugly. I think it's going to keep on drifting down and get uglier and uglier and uglier in the retail sector. So, one of the things you could be looking at for the retailers would be XLY, which had a huge pop recently, right? Consumer discretionary. This is a lot of retailers in here. You can see today on that news from Walmart, nice big red candle, dropped about 3.22%. But it's had a wild ride here recently, especially what we saw on a weekly basis back here in middle of May. Now on the daily, when I look a little bit closer, I mean, beautiful. Came right up to 157.91. Nice little supply zone. Smacked its head on it literally to the tick and has been selling off ever since. So my guess is you'll probably end up closing this gap back down at 141 for XLY. But if you're someone long term that feels like this might be an area, there are a lot of really good buying opportunities here. A lot of stuff is really cheap. It's just a question of, is this cheap, or is it going to break and end up some of these lower levels like we talked about, maybe 122, somewhere in that ballpark. So you never know. It's all what risk you want to take with it, right? How much money you want to put on the line. Wouldn't it make sense to use options instead of XXX ETFs? Yeah, I would say, for me personally, I think it does make more sense to use options. I think you just have to have, understand the basics of options, and you could do rather well. So, for example, if you were really bearish on oil, and you wanted to, capitalize when things go down, you could be using the futures market. And there's options on futures, which you could be using as well, which we've had a couple guests talk about that. What does Tom say? If home builders were smarter, they'd build and own rental properties because of the inevitable feast and famine cycles. So very interesting you say that. So Diana Hill, who used to run Online Trading Academy's real estate program, and just an amazing person, she was on Power Trading Radio with me, and that was her point multiple times, is what she's seeing is Toll Brothers Lennar, they're not building single family homes, the McMansions, if you will. They're building apartment buildings because they see that the rental side of it is going to do much better. So, part of it is maybe follow what they're doing and the writing being on the wall, and then people cutting out of their McMansions to, downsize a little bit. I don't know. I don't know where to get all that data from. Maybe I can get Diana on the program here in a little bit and to talk about the current status of the markets and where we may be headed. But it is definitely very exciting times, I will say. Okay, so let me real quick go to this one. I'm going to have to wrap up here a little bit early. I got to sign some documentation today for some real estate deals, so I need to wrap up. But here is, I'll wait for your comments and questions if you got something else you want me to look at real quick. But here is your calendar for tomorrow. Very important stuff, of course, as you are all aware of, very well aware of. Tomorrow, right here, is the Big Daddy. That's going to happen at 11 a.m. Pacific time. We get the FOMC rate statement. Right now, the expectation is that we are going to see a 75 basis point increase, as you can see here. But that could, right now, 24.9% chance that we could see 2.75 tomorrow. How would that react the markets? I don't know. I'm not sure exactly what that impact would be. I think that if we do get a full percentage point, we will see much more wild fluctuations in the FOMC announcement. So, I'm going to do 3 popcorn trades of the day this week. Yesterday, at the end of market today, we had Google and Microsoft. For tomorrow, it's the FOMC announcement. Just put that thing on a 1-minute time frame right around 11 o'clock. I would do it like 5 minutes before 11, kick back, grab some popcorn, watch it, be careful. I would encourage you not to trade it. I know I'm not allowed to give financial advice because I'm not a financial advisor, but look, my advice would be stay out of it. It's going to be a wild whipsaw thing. And usually what usually happens, and it could go either way, you'll usually get a huge rip up, and then within the next 5-10 minutes, it comes ripping back down and goes the exact opposite way. So usually the initial knee-jerk reaction on an FOMC announcement is the wrong direction. Just history. Well, let's see what happens tomorrow. We'll take a peek at those numbers as they roll out. We'll be looking at it on tomorrow's show. But those FOMC announcements are going to be wild. And then also 30 minutes after that, you have the press conference, which is also going to be very exciting. It really depends what Jerome Powell says. I will put my 2 cents on it and give you a hypothesis about what Jerome Powell is going to say. He'll stand there and look very stoic and pretend like he's super intelligent, which he is. He's a very smart man. And he's going to be like, the committee has looked at the numbers and we feel like inflation is moderating. We feel like it's starting to slow down a little bit, that our actions at the Fed have been working, that raising the Fed funds futures rate, or Fed funds rate, is really starting to have an impact. And we won't know for certain for another few months, but we really feel that that's working. So we'll be moderating all the data closely, or monitoring all the data very closely going forward. And the jobs are concerning. We are starting to see some layoffs. That's a bit of a question, but we do have very low unemployment right now, and we feel comfortable with that. So there we go. That's it. That's it. I think I might have verbatim got it, except for the few misspoken words I said there. That's probably what Jerome Powell's going to say tomorrow. I watched all of the press conference because I think it's entertaining to watch. But that's the second half of the trading session. The first half of the trading session, guys, it's not like it's a boring day. You've got durable goods orders coming out. This is 1 hour before the market's open. Durable goods orders. You have goods trade balance, preliminary wholesale inventories, and then 30 minutes into the trading session, we've got pending home sales. An hour into the trading session, we have crude oil inventory. So it is a busy, busy day tomorrow for the U.S. markets. And heck, that's just the U.S. If you're trading at the wee hours in the morning with the euro, which has been a wild one as well, if anybody's trading that euro dollar, you can see tomorrow at the top, they've got M3 money supply, private loans, and German 10-year bond coming out. So, yeah, going to be a wild day. And if you're trading in Australia, we'll talk about that tomorrow on the show, but they have retail sales numbers coming out tomorrow night. Does Powell drive his own car and put gas in himself? Look, he makes so much money, he's not worried about gas prices. He's got chauffeurs. We're a taxpayer dollar probably paying for all that stuff. Yep, FOMC, I would say wait it out. Here's the tough part. You wait and wait and wait because you know there's something so exciting going to happen that the natural instinct on our part as traders, I got to be in. I got to be in. Well, the problem with that is if you're wrong, you can be wrong and be incredibly broke very quickly if you're leveraged in any way going into those announcements. How do I know? Because I've done it. I've looked at the FOMC announcements as, this is going to happen at this time. Hey, you know what? I know it's going to be a bad number. Let me just load the boat short. And it rips up, stops me out. All of a sudden, I jump in short again after it stopped me out, and I get stopped out again. You get whipsawed and end up with the whiplash. Algo's reading Powell's words equals whipsaw. Yep, and that's truth. They have computers that are going through and reading that press release statement as fast as possible. Before Powell can finish, it will be released, and the computers will have read it. Yeah, I would never want to be in Powell's position. Tom says, the Fed part of my brain went numb. 100 Fed announcement ago. What increases have they actually made? Well, they've been increasing the Fed funds rate. That's what they've been doing. So we'll see ultimately what happens there with the FOMC announcement. Lisa says, Merlin, what date is the recording where you spoke of your silver trades and your stock and you could have 3.5%? I don't know. Lisa, sorry, I don't know. You know what? I think what happened there, so go to SLV. I think I can tell you. It was basically when the last expiration happened, and that was, real quick, I'll just bring this up here. Last expiration was on the 15th, so for me it was the 17th. So on the 17th, right here, or I guess the 18th, I sold the 350 puts on the open. I was pretty much at the money when I got it, and that is a 3.5% rate of return for me on SLV covered calls. Right, I'm long 2,000 shares of SLV, so I sold 20 covered calls at 17.50, and that gave me 3.5%. And my finish line there is going to be August. Let me just make sure I get it here. August 19th. All right, so I've got another month, but I'm comfortable with it. Even if I get more silver or it gets taken away from me, I'm fine with that. Let's see. How is Gemini still paying interest on crypto? I'm holding a portion, hoping for the best. Why are they different? So Gemini, as you know, the whole lending area of crypto right now is just falling apart. And the reason I think Gemini is doing okay is they're not offering huge rates. They're offering much, much, much lower rates than any other brokerage firm. If you can look at their list, I have a spreadsheet that's all done up, marked up with all the different lenders out there, and Gemini is consistently the lowest rate of return out there. They didn't have any, not that I know of. I don't believe they had any exposure to Three Arrows Capital. Now, who are they lending it out to get that rate of return? I don't know. I think they're definitely in a better position just because they're not over-promising on rates of return, but that still doesn't make them immune, regardless of the Winklevoss twins or not. The higher rate of return that you have to pay your customers, the higher rate of return you have to earn on their deposits. Same way, can you imagine if a bank was going to pay you 4% interest, but they only made 3% lending your money out? That business ain't going to work. So whatever Gemini is doing on the back end, it's lending that out. My guess would be that some of the ones that they're using are actually staking assets, and they're taking that, offering you a little bit, and then they're staking it and making money with that. Now, some are staking assets, some are not, like Bitcoin, for example. So, yeah, I don't know if they're very different than these other lending protocols. It's just who are they lending the assets out to, and what. And my guess is they're lending it out at a lower rate. That's why they're paying us less as customers. Let's see. Maybe I was got to get those impressions on. I love doing the impressions. It's fun. Bought quantitative easing Mega Millions ticket. Wish me luck. Hey, I hope you win, Joe. I hope one of you wins, because then I know someone's going to graciously give me $1 million out of it. That'd be awesome. I was asking for someone. I will tell them to watch the recording. Yeah, I'm pretty sure it was the 18th as I went over my options trade for that day. I'm pretty sure that was the day. But remember, I own SLV, so that was a covered call position. What I did the month previous was I sold puts on, I think I got about 1.5%, where I sold the 1750 puts, earned some premium, and I was exercised. Great, fine with me. Silver would be driving me nuts if I were in it now. It is driving me nuts too. You look at that SLV chart, it's pretty brutal. It's just kind of drifting down. You know, the tough part is it's the exact opposite of the dollar, and I'm so bullish on the dollar, yet I'm still bullish on silver. But my time frame on holding silver is I'm okay with holding it as long as I can keep selling options against it and collecting premium. Even as it's dropping, I'm earning a nice rate of return. That's really the goal for me. All right, Jay Best, thank you so much for the contribution, my friend. I do appreciate that. That will do it for today, so I can get out of here and go sign some docs. If you guys have any comments, questions, feedback, you know what to do. Put them down below the YouTube video, or you can email me, TraderMerlin@gmail.com, as many of you did. I want to thank those that send in questions. So Lee, and there was another one in there too, which I don't know where I put that question. But there was a couple questions I need to get to tomorrow, and because of some of the comments and questions you guys have sent in, I'll see if I can get a couple other guests on the program that you have been suggesting, ones that I believe in and I think are decent people. So that will do it for today. Happy trading, everybody. Be very careful tomorrow with that FOMC announcement. I'd hate to hear somebody say they got their clock clean by being on the wrong side of that, but if you are going to trade it, be very light. Until then, happy trading, everybody. I'll see you all mañana. Take care.